Hey, thank you for taking the time to click on today's video. As you can imagine, as a fiduciary and a financial advisor, I get questions all of the time, nearly every day, as to why the stock market continues to lose. And today I want to take a little bit of time to break it down into three very plausible reasons as to why the stock market continues to experience this volatility and you continue to experience losses in your 401k and your 403b and your stock portfolio. The first major cause of loss taking place right now is due to what the Federal Reserve is doing. We know that ever since February of 2022, the Federal Reserve has been really voraciously tackling inflation, and the way that they do that is increasing interest rates. Now, raising interest rates in a thriving economy is not a good thing. In fact, that's the purpose of why they're doing it. They're trying to contract the economy. They're trying to slow the economic car down. And unfortunately, this has a very big ripple effect. This is creating volatility for corporations. And as a result, corporations are seeing smaller profits. They're seeing less disposable income because people are losing their jobs. We know that so many corporations after COVID had done extreme job hiring, and now they're realizing because the economy is contracting, they simply have more employees than they actually have work for them. And so as a result, we have job layoffs that are taking place. We have smaller profit margins. And if you're investing in corporate stock and those corporations are bleeding money, profitability is going down, you realize that you don't want to hold on to this company. This is going to continue to dwindle and decline. And so as a result, at the end of the day, if there's more sells than there is buys, well, then guess what? The stock market declines. The second thing that we know is really affecting the stock market is the number of retirees. When we think about retirees, the baby boomer generation in particular, we realize that by 2024, that will be the peak of the retirement of the baby boomer generation. We are going to be to a point in our nation in 2024 in which we have over 12,000 people per day turning age 65. And why do people save money in their 401ks? Why do they set money aside in 403bs and in their IRAs and their Roth accounts and their individual brokerage accounts? Why are they saving this money? They're saving the money because they know that when they retire, when that paycheck has stopped coming, they're going to need to supplement that lost wage, that lost income. And so as a result, as the continued increase in retirees occurs, we have an increased withdrawal that is taking place from stocks, from mutual funds, from index funds. And this is adding insult upon injury. This is another dynamic that is affecting and causing Wall Street to continue to contract, stocks to continue to go down. The third reason, and this one is interesting. This is one that maybe you never thought about, but nevertheless, it is true, and it's something that Wall Street is in blatant denial of. And that's the fact that because the Federal Reserve is raising interest rates, finally, after over a decade and a half, we are seeing interest rates within government bonds, bank CDs, fixed interest annuities, fixed income instruments, that are paying us better interest than we have seen in ages. Now you can walk to your local bank and get a 4% CD. You can contact an insurance company and get a fixed interest annuity that's paying you nearly 5.5%. You can buy bonds that are paying you 6 and 6.5%. You see, as interest rates continue to rise, people are realizing, why do I want to continue taking risk in the stock market when it's potentially eroding what I've got for retirement savings? I'm losing at the most vulnerable time of my life when I can just take this money, I can make this money safe, and I can put it into things that are going to create for me a reasonable amount of interest return. And so you see, it's not just one thing. It's not one thing that's causing the stock market to go down. It's not just the Federal Reserve. It is a combination of things. And this is the reason why, when it comes to your retirement, you want to be working with a fiduciary. You want to have someone providing you a second opinion on what you're doing, setting you up for success so you can have the retirement of your dreams, so that you're invested properly, not for growth, but for the distribution stage of your life. The next stage of your life in which you may very well be retired for the next 20, 25, 30 years, and you're going to need that consistent income stream that's paying you reliably not out of your principal, but off from what your principal can generate. Maximum output, minimum risk. So hopefully today's quick video helps you understand why we are continuing to see the massive pressures on the stock market every single day, and setting in your mind the reality that these things are not going to get better. They're going to continue to be greater and greater headwinds against the stock market. And if you have a majority of your money in the stock market, you need to begin right now looking for alternatives to make your money safer so that you can have the retirement of your dreams. Thank you so much for watching, and remember, it's up to you to make today a great day. And one last thing, if you wouldn't mind sharing this with your friends, giving us a thumbs up if you like the video, and if you like our weekly videos, hit that subscribe button and that little bell, and we'll remind you each and every week when we release a brand new video. Thanks so much for watching. Have a great day.